but we're putting focus on Endurance Tech. That is the company that reported their steady set of numbers in the fourth quarter. More importantly, what the outlook is beyond that is something that we'd like Gopal Sastry, who's the Group CFO's view on. He joins us now. Thanks a lot, Mr. Sastry, for joining in. You know, nearly a quarter of your revenue comes in from the European markets. There is a fair amount of geopolitical uncertainty that we're seeing. In light of all of this, what's the kind of very near-term outlook that you have? The next couple of quarters, are they likely to face some sort of demand challenges? And in light of that, what's your entire year's outlook on the revenues?
So the challenges, as you mentioned, posed by the macro environment are true. Yes, that we are seeing volumes are dropping. And we closed last year with close to 305 million of revenue for our European operations. But as we see the evolution now, our order books are very healthy. We have strong orders, from micro perspective of the company. And this has come because of, as we have been mentioning this quite often in the past also, we have done some very careful order acquisitions in the past, and we have invested in capacities for those orders and without increasing the fixed cost element. So those are giving us the flexibility to cater to any kind of demand which comes from the market, whether it is for their electric vehicles, for the plug-in hybrids, or even the normal ICEs, which is what the demand keeps oscillating from to. But agnostic to the powertrain, we have demand, we have capacities, and because of which we do see that we will not be facing too much of a problem because of the demand drop compared to the markets.
Hi, Mr. Sastry. Thanks a lot for joining in, sir. What are you doing so right, though, in Europe? Because you're definitely outgrowing the industry out there. The industry is seeing quite a lot of turmoil, but you managed to grow quite well. Do you expect that trend to continue?
So there is one important aspect which will give us a significant growth in FY26 because that's coming from our acquisition of a company called Sastry, which is an 80 million euro company with a very healthy EBITDA margin. And we have done a 60% acquisition of that with a definitive agreement to acquire the balance over the next 5 years based on the EBITDA multiple. So this is going to give us a significant addition to our revenue, which is coming from the inorganic side. Organically also, we are seeing that we have acquired some interesting orders in the past few quarters, which are also coming into their job run and startup production now. We should see that Europe operations will not suffer unduly from the effect of the market, and we will be growing on the near term and also the medium term.
In terms of new business, you did speak about the acquisition in which you made 60% investment. Now you're looking to increase it to 30%, increase it by another 38% as well, take it to 100%. What have been the synergies in terms of, revenue addition when it comes to new clients for the other parts of the business? That's point number one. And secondly, you had spoken about some new ABS contracts domestically for Bajaj Auto and Royal Enfield as well. What's the update on that?
So I'll answer the first question first. From the European, the acquisition is giving us a significant presence with a OEM with whom we were not present earlier. So that is giving us a good advantage, especially in the geography of Germany. Two, it also gives us the synergy because this acquisition is not only machined castings, but they also have the capability of building their own machines. So this, together with our existing German operations, is giving us a strong presence. Now, this is in the backdrop of a significant number of vendors in the supply chain of the market in which we are present in. They are all growing weaker because of various aspects pertaining to their burgeoning fixed cost and the heavy investments which are made in the past. So this is giving us a unique opportunity because we are still cash positive in Europe. We are having good margins in the businesses which we are doing, and we also have a very low burden of the fixed cost. With all this, we stand in a good position to make the best use of the market there. So that's one aspect. That's the first question which you asked. The second was on the braking. Now, yes, we have been investing on the braking side, not just the foundation brakes. We have been growing significantly on the overall, right from the brake lever all the way to the brake in terms of the controls, that is the anti-lock braking system. So we have been in the market with our single channel braking, anti-lock braking system already. Now we have started supplies of the dual channel anti-lock braking system to Royal Enfield and also Bajaj. So as we had projected, now we are very big already in the disc brake segment. We are almost fully utilizing the capacities which we have put. And all the backward integration we have planned in the anti-lock braking system, like making our own braided hoses, making our own electronic control unit, and also we in the future will be using our SMT line in the EMS. We have put as an backward integration of the battery management system. All this is going to give us good cost advantages and also the ability to capture the market quickly and grow in those lines.
All right, sir, give and take everything. You mentioned your order book is quite healthy. Could you quantify it for us? Point number one. Point number two, for the year. Yeah. For the year, with your inorganic growth, with the kind of traction you've seen on business, what is the revenue growth you'll be looking at, and what kind of a margin band should we work with?
I will show you the rearview mirror. You can look at the road in front because we don't give forward-looking guidance. But if you look at the last 5 years, our order book was close to 4,500 crores of orders we had acquired. Now, I'm talking about standalone India. I'm not including Europe. And within this 4,500 crores, we do not include the orders which we get from Bajaj because they being our largest customers, we more or less get a significant market share of what they do. Out of this 4,500 crores, close to 1,800 crores has gone into their job one in the last financial year, which means the full volumes of those will come this year. Now, another 1,100 crores is expected to have their job one or start of production in this financial year, which also augurs well. Plus, our new investments, that is, we had 3 new investments in the last year. One was we are setting up a new alloy wheel plant in the Bitkin area of Aurangabad. We are setting up a 4-wheeler casting plant which caters to a lot of international customers. We already have received close to 280 crores of orders from large marquee international customers for specialty electric vehicle related castings with some specialty coatings and surface treatment. And we also have announced that we are getting into battery pack assembly, where we have recognized some white spaces where we can use our application engineering and also our battery management system capabilities to naturally progress into. All this also will see some revenues in the upcoming quarter. So with all this, we are very positive that the year, as we see, is opening up nicely and interestingly. And added to that, we are also looking at some amount of volume increase from our customers also. If not the big double digits, at least it will be in the higher single digit growth also, because the monsoon is good. The government has been announcing certain very strong initiatives like the tax cuts, the overall increasing the liquidity market, making it cheaper. So we are seeing that to augurs well for us.
So, I understand you won't be able to give us forward-looking guidance, but just qualitatively speaking, last year you grew in low teens, about 13% in terms of revenue. Your margins improved by about 50 basis points. All things considered and all the triggers, do you think FY26 will be better than FY25?
That's our endeavor.
Okay. All right. And what about your revenue mix X of two-wheelers? Bajaj is a big client for you, accounts for nearly 40% of your India business itself. But you have been looking to increase your share coming in from four-wheelers, which is a higher value product, right? What's your aspiration here?
See, our aspiration, if you look at that from a strategic perspective, as we look at year 2030, our European business is predominantly four-wheeler, and that's about 25% of our business. Close to 5 to 6% of our India business is from four-wheelers. So we would like this but the two-wheeler business also we have significant headrooms, because while we have good market share with our main customer, Bajaj, for all the other products with all the other customers, while we are receiving a lot of RFQs, like we have got about 3,400 crores of requests for quotes, which we are actively pursuing. So we see a significant headroom in our two-wheeler business also, given that two-wheeler business would grow, and we are looking at organic and inorganic opportunities in the four-wheeler business, and European business, as we just saw, will grow significantly because of the acquisitions. We would be happy if we reach about 35% of our total business coming from four-wheelers. It will be something which we are aspiring to, and that's our strategic plan.
All right, Mr. Sastry, a Got it, sir. Appreciate you joining in. Wishing you all the best for the remainder of this fiscal. You're sounding quite optimistic about the prospects. We'll try to squeeze you on some numbers post your quarter one results as well. Thanks a lot.
We believe in our team here. Thank you.
All right. Appreciate that. Thanks a lot for joining in. Well,